Before we kind of talk a little bit about bear markets, I do want to talk a little bit about where we currently stand in the equity markets, because I think a lot of investors are asking, is the volatility we saw at the beginning of the week a sign of more to come in terms of volatility, or is this potentially the end of the worst of it, if you will? So if you look at the S&P 500, we managed to pull back to this 5140, 5150 support level. So this was a resistance level at one point that has now turned into support. You also have the 150-day moving average coming in here around 5150. I'm sorry, 5200 acting as some support here. So far, equity markets have held these levels. We obviously had a nasty few days in terms of a sell-off, but so far, subsequently, we've had three strong days. And the job report this morning, jobless claims, there was a lot of nervousness going into um, that number because what drove a lot of the volatility was the unemployment number that came out last Friday that spooked investors. That concerns around the strength of the U.S. economy, concerns around the cooling labor market, and whether or not the Fed had waited too long to cut interest rates. I would say that the job numbers this morning alleviated some of those concerns to some degree, which is why we saw the S&P have one of its best days since January today. So overall, the equity markets, while suffering some pain this week, so far has been holding strong at the moment at these major support levels. Note that the RSI, very infrequently does RSI on the S&P 500 get to this 30 level, and they, generally speaking, have been pretty reliable buy signals here. Sometimes you get a short rally with a further decline, but overall they've been pretty strong buy signals here on the S&P 500. That's exactly what we got here as of Monday's open. The other metric I want to pay attention to here is the VIX. We had VIX spike all the way up. We opened up around 55 on Monday. It did intraday spike as high as 65, but as you can see right now, we're trading around 25 and a half or so. It's still the highest level we've seen over the past year prior to this recent spike. But we have reached what we typically would call a panic level of selling on Monday. And subsequently, now that we've retreated back to this $25, 25% level on the VIX, that typically would coincide with that typically would suggest that the panic selling that we saw is over, that we're less likely to see more of that continued violent sell-off that we saw here on Monday. It's not meant it doesn't mean that it can't happen again, but certainly the chances of that happening now are far more subdued.